Welcome back to Investors Corner. Today we're diving into one of the most important conversations for investors right now, the best real estate strategies for 2026 and how to build real cash flow and long-term wealth in today's market using real examples from what we're actively working on. Over the past few years, investors have had to navigate higher interest rates, rising insurance and property taxes, shifting tenant demand, and tighter lending requirements. It's been a challenging environment, especially for people who entered the market during the low-rate years and are now adjusting to a new reality. So the big question is this: what is actually working right now, and what should investors be focusing on moving forward? Today we're going to walk through 5 proven strategies that are performing well in this market. We'll talk about turnkey rentals, build-for-rent, triple net leases, DSCR financing, and opportunity zone investing. And instead of just talking about these in theory, I'm going to connect them to real opportunities we currently have available. Let's start with turnkey rentals, because this is one of the fastest growing segments we're seeing right now. Turnkey investing means you're purchasing a property that is already renovated, already leased, and already professionally managed. In most cases, everything is set up for you before you ever close. You buy the property, it produces income, and you don't have to deal with contractors, rehab overruns, or long construction timelines. In 2026, turnkey is becoming more popular because many investors are busy professionals. They want passive income, but they don't want another full-time job managing properties. With labor and material costs still elevated in many markets, avoiding rehabs can also save you a lot of stress and unexpected expenses. Right now, we have a portfolio of turnkey properties available that are designed specifically for investors looking for stable, hands-off income. These are fully renovated, professionally managed, and already positioned for immediate cash flow. Many of our investors are using these as their entry point into real estate or as a way to diversify their existing portfolios without adding complexity. The biggest advantage of turnkey is immediate income and predictability. The trade-off is that you're usually paying a little more upfront and giving up some of the heavy value-add upside. That's why it's so important to work with a team that focuses on quality renovations, strong tenant placement, and long-term performance. Turnkey works especially well for out-of-state investors, first-time buyers, and anyone who values consistency over aggressive speculation. Next, let's talk about build-for-rent. Now let's shift to triple net investing. With triple net properties, the tenant is responsible for property taxes, insurance, and maintenance. In most cases, you're leasing to established businesses, which creates very predictable income. This is one of the most passive forms of real estate investing. Once the lease is in place, there is very little day-to-day involvement. Rent comes in, expenses are covered, and cash flow is stable. One of the opportunities we're excited about right now is our Peak Flex Phase 2 project. This is designed for investors who want exposure to commercial real estate with strong tenant demand and long-term lease structures. These types of properties are ideal for investors who prioritize stability, preservation of capital, and low management responsibility. The trade-off with triple net is that you're usually buying at a lower cap rate, meaning you're paying a premium for stability. You're also tied closely to the strength of your tenant. That's why location, lease structure, and tenant quality are critical. Triple net works best for investors who are focused on long-term income and portfolio balance. Build-for-rent is where investors develop brand new homes specifically for long-term rental use. This has become one of the strongest trends in residential real estate, and it continues to grow in 2026. Renters today want newer homes, modern layouts, energy-efficient systems, and lower maintenance issues. They're willing to pay more for quality, and that translates into stronger long-term performance for investors. We currently have new construction and build-for-rent projects available that are designed from the ground up with investors in mind. These homes are built for durability, long-term leasing, and strong resale value. Because they're new, investors benefit from fewer repairs in the early years, better tenant retention, and more predictable operating costs. Build-for-rent does require more patience and more capital than turnkey because you're dealing with construction timelines and development phases. But for investors who are thinking 5, 10, or 15 years ahead, this strategy can be incredibly powerful. It's especially well suited for investors who want to build a high-quality portfolio that will perform well across multiple market cycles. Next, let's talk about DSCR financing, which has become a major tool for investors over the past few years. DSCR stands for Debt Service Coverage Ratio. These loans are based primarily on the property's income instead of your personal income. Lenders focus on whether the rental income can cover the mortgage payment. This has been a game changer for entrepreneurs, business owners, and full-time investors who don't fit neatly into traditional lending boxes. DSCR loans make it easier to scale, close faster, and build larger portfolios. Many of our investors use DSCR financing to acquire turnkey and new construction properties because it allows them to grow without being limited by conventional loan caps. The key is making sure the deal still cash flows with higher interest rates and conservative underwriting. DSCR works best for experienced investors who understand cash flow and long-term planning. Finally, let's talk about Opportunity Zone investing. Opportunity zones are designated areas that offer major tax incentives for long-term investment and redevelopment. When structured correctly, these investments can defer, reduce, and in some cases, eliminate capital gains taxes. We currently have a duplex development project at East Powell that is located in an opportunity zone and designed to take advantage of these tax benefits. This type of project is ideal for investors who have significant capital gains and are looking for both strong appreciation and long-term tax efficiency. Opportunity zone projects tend to be larger and more complex. They involve longer holding periods, regulatory requirements, and careful planning. That's why it's important to work with experienced legal, tax, and development partners. This strategy is best suited for sophisticated investors who are thinking about wealth preservation and legacy planning, not just short-term returns. So how do you decide which of these strategies is right for you? It starts with understanding your goals. Are you focused on monthly income, long-term appreciation, tax efficiency, or portfolio growth? Do you want to be hands-on or hands-off? How much time and capital are you willing to commit? There is no single best strategy. Some investors focus on turnkey and DSCR loans. Others prioritize development and opportunity zones. Many successful investors combine multiple approaches to balance risk and reward. What makes the biggest difference is having a clear plan and working with a team that understands the full investment lifecycle, from acquisition to management to exit. As we move through 2026, the investors who win will be the ones who stay disciplined, stay educated, and make data-driven decisions instead of emotional ones. If you'd like to learn more about any of the turnkey, new construction, triple net, or opportunity zone projects we discussed today, you can visit our website and explore the current opportunities. And if you'd like a personalized strategy based on your goals, our team is always happy to walk you through your options. Thanks for tuning in to Investors Corner. If you found this episode helpful, make sure to subscribe and share it with another investor who could benefit from this information. We'll see you next time.